Hi, guys. Welcome to Collective's webinar. Just going to give a couple minutes for everybody to pop in. But if you guys want to start, just drop your names in the chat if you want, where you're from, what you do. That way we can just all kind of chat for a minute while we're waiting on folks. Hey, Cam. All right, we got Delaware, Arizona. This is one of my favorite parts, seeing where we have people from all over the place. Hey, Christy from Florida. I'm from Florida too. I'm in the Vero Beach area. We got Brooklyn. Hi, Celeste. Amazing. So cool, guys. New Jersey, Montana. We got some freelancers. Owner of Jay's Teriyaki in Salem. That sounds good. And I've been dying to go to Salem. All right, just gonna give like one more minute. Oh, dance teacher, choreography performer. That is amazing. Congratulations, Ricardo, launching your first startup in automation and AI consulting. Oh my gosh, Alexander, also from Vero Beach. How cool is that? What a small world. Birth doula. That's so cool. All right, guys. We can probably go ahead and get started now. Thank you so much for sharing your locations and what you do. Like I said, it's always just really cool to see that. One of my favorite parts about working at Collective is connecting with our members and hearing about what they do because it's always so cool. But my name is Elizabeth. I am a member relationship manager here at Collective. I'm also a credentialed enrolled agent, so I am a tax professional. We're going to go through this deck pretty quickly. It's just about common tax deductions for creative professionals and freelancers, so things that sometimes get overlooked. And then at the end, we'll have time for a Q&A. So if you guys do have questions, just feel free to pop them in there and we will get to them at the end of the presentation. So our agenda today is to go over common deductions that you may be overlooking, health insurance, retirement contributions, best practices for audit-proof recording, and then of course that live Q&A. Just a little disclaimer, this webinar is just for educational purposes only, so nothing contained in this presentation should be construed as legal or tax advice. So always just consider consulting a professional about your specific situation if you need tax advice in operating your business. Okay, so some common deductions you might be missing as a freelancer. A lot of times our creatives, you guys think like this says in your ideas, like you guys are experts in your business at what you do, but of course the tax code is daunting. They make it really difficult to understand and interpret. And a lot of times it's like using different parts of your brain, right? So it's totally understandable that it would be like a foreign language to you guys. I know, honestly, even when I started in this industry many years ago, it felt like that to me. It felt like it was speaking another language. So here are some write-offs that do speak your language. If you work from home, you have your home office, your phone, your internet. You can write off a portion of your rent, your utilities, your internet, your cell phone bill. Basically, if you have an area of your home that is used exclusively for business, you get a business percentage where you can claim those deductions, and that can come in really handy. A lot of folks think like if they're not renting like a studio space, for instance, and running that through their business bank account, that they don't get a deduction for their workspace. But that is actually not true. You do get one, even if you work from your home. So that is one that a lot of people just aren't aware of. Another one would be business use of your vehicle. Even if you only have one vehicle and your vehicle is not owned by your business, you can still get awesome deduction for your mileage. You can track your mileage. Like in this instance, if you're a photographer and you're going on a shoot, you can track your mileage there. Or if you're going to take a client out to get a cup of coffee with you or to get lunch with you, if you're going to pick up supplies for a project, all of those things are you able to be counting that mileage, which gets reimbursed to you at the IRS's standard mileage rate. So the business related driving can mean valuable deductions for you. Travel, meals, and continuing education, you can deduct your airfare, lodging, and 50% of your meals and costs for workshops or courses that sharpen any of your creative skills. So if you are traveling for work, there's a lot of deductions that you can take advantage of. Typically, if you are just going to run out, even though you may be working, it's like a full work day for you, you're going to pop out to go grab like a sandwich. That's typically not deductible for you. But if you are traveling away from home, you can deduct 50% of the cost of your meals. And that's something that a lot of people don't know. Creative business expenses. So things like software, like if you have like a tech stack, you're an editor, probably got a lot of software that you need, any gear, website cost, memberships, like dues, anything like that, that support your creative business. Those are all business expenses as well. All right, moving on to health insurance and retirement contributions. So, health insurance premiums are actually deductible for health, dental, and long-term care, but only if coverage isn't available through another employer or spouse's plan. So, like if you have another W-2 job and your business is your side hustle and your W-2 job does offer a health insurance plan, you may not be able to deduct that through your business. But if this is like your your main source of revenue, you don't have a W-2 job where you can get a health insurance plan, maybe you don't have a spouse or your spouse is also self-employed and they don't have that option through their job to put you on their plan, you can absolutely get that deduction through your business. Retirement contributions, SEP IRAs, solo 401ks, super common retirement plans. With the SEP IRAs, these are pre-tax savings funded by you as the employer. They're great if, you're just a solo business, but if you do hire employees, keep in mind that you typically need to contribute for them as well. This is really commonly used by sole proprietors or single member LLCs. And then a solo 401k is something that we talk about a lot here with our members who are S Corp owners. They offer a little bit more flexibility than a SEP IRA because with a solo 401k, you can contribute on both sides because with an S Corp, you're both employee and employer. So you can contribute on the employee side up to a set amount. And then on the employer side, you can also make an employer contribution as well. It is limited with an S Corp, it is limited to your wages though. So there are some limitations. And of course, you have to, with any retirement plan contribution, you have to be mindful of the overall contribution limit, which is $70,000 this year if you're under 50 years old. All right. What are some best practices for audit-proof record keeping? So, as we know, bookkeeping is a very tedious but important part of owning a business. So, mastering like your bookkeeping, your record keeping, all of that is really important for creative professionals so you guys can maximize those deductions and make sure you're optimizing your take-home pay. You want to have clear expense tracking. So that just means you have detailed, organized records, whether you're using a software like QuickBooks Online or just a spreadsheet. You want to make sure that you're categorizing your expenses. So, like all of your transactions, you want to have dates, amounts, and you want to have the clear business purpose. The general rule for business expenses is they have to be ordinary and necessary. Those are like the IRS's criteria for that. You want to make sure that you separate your finances. So you want to use separate bank accounts for your personal stuff and your business stuff. Keeping them separate just makes it way easier on you in the long run when it is time to do your bookkeeping. You're not having to comb through tons and tons of transactions and try to remember and differentiate between like, was this personal and was this business? Because it can get a lot of confusing, especially when a lot of those transactions can overlap. Like we're all ordering stuff on Amazon constantly, professionally and personally. So separating those out just makes it easier on you. Plus, it's what the IRS wants you to do. When you have everything in one account, they call that commingling. And that is a hard no-no for them. They don't like to see that. So just making sure everything is separate is a really good just kind of rule to live by. Also, if you do have an LLC, you really do want to have a separate business bank account in the name of the LLC for liability protection. All right, for IRS compliance, again, we want accurate receipts, invoices, logs to support business expenses. If you're running everything through a business bank account, in most cases, you don't need to hang on to like every little receipt. What we usually say is, typically the record in your business bank account is going to be sufficient. But if it is a really large purchase, like if you purchase a new, really nice, expensive camera, hang on to that receipt, or a new laptop, hang on to that one. Really anything I would say over like $2,500, hang on to the receipt. And then you're going to want to retain that documentation for at least 3 years from the tax filing date. All right, so that is pretty much everything that we need to cover today in these slides. Like I said, we do reserve a bunch of time for the Q&A. We also, just to let you guys know, if you do want to book a call with one of our advisors, you can scan this QR code and you can ask them like a little bit of more tailored questions about your personal situation. You can book a one-on-one call with one of our business advisors to see if an S Corp or collective may be right for you. And if you do join collective and use our promo code Sun Savings today, you get $200 off at checkout. So this is a really good deal and a really good opportunity to get connected with one of our business advisors and ask some questions if you're considering going the S Corp route. So I'll leave this up on the screen for just a minute so that way anybody who wants to go ahead and scan the code can do that, and then we're gonna jump right in to the live Q&A so you guys can ask any questions. Okay, perfect. So let's go ahead and jump into the Q&A. Moses, will this recording be sent out to us? Yes, it will. We send the recording out within 24 hours after the webinar, so you will absolutely get a copy. I have a vehicle under my LLC. Can I still deduct mileage? Great question, Moses. Basically, the IRS wants you to like pick a lane, so to speak. So you would either deduct your actual expenses or the mileage route. So if you're already deducting your vehicle under your LLC, you are covered. Can you comment on the variation of holding an LLC without paying a salary to myself? Hence, obviously, health insurance deductions are not applicable, but many others like home office, phone, and so on. So, you're saying just with your LLC, you're not paying a salary, you're just taking your owner's draws. Um, you're correct that with an S corp, the health insurance deductions do get added in to your W-2. You're still, eligible for the home office, phone deductions, all of that. But if you don't have the option to have a health insurance plan through other means, you can get a plan through like the marketplace, for instance, and deduct that through your business. Great question. Cameron, can you explain the SEP IRA? Can the employer also contribute a certain percentage of the employee's contribution? So that's a great question, Cameron. With a SEP, it's actually just the like employer contribution portion. So the solo 401k is where it has like the employee and employer. But with a SEP, you are your own, like you're your employer, so you can contribute there. And then, yes, if you do have other W-2 employees, you can contribute a percentage to their SEP. I believe it does have to be the same percentage that you would contribute to your SEP, has to be like uniform. What is your tip for which software or service to use for the most effective and least laborious bookkeeping? That is a great question as well. So, I'm really partial to Xero in terms of paid softwares. That's what, we used for a bit here at Collective. Some of our members are, being migrated from Xero to our proprietary software. So I have a lot of exposure to Xero, and I think it's just really user friendly. Plus, there's tons of information online. Like Xero does a really good job with educating their customers on how to use their software. So if you're looking for paid, I do prefer Xero over QuickBooks, but as you know, QuickBooks is more of a household name. Xero is kind of becoming one, and it's Xero, by the way, not Zero. A lot of folks do use QuickBooks still. It's not a bad option, but QuickBooks can be a little pricey, and they typically do raise their rate every year. Also, if you're looking for like a cheaper option, I would say I've heard a lot of good things about FreshBooks from our members and Wave. Okay, what are the retirement and health insurance options for partnership S corps? So, as far as retirement goes, you can do the SEP IRA or the solo 401k. Well, it's a partnership. If you don't have employees, you can do the solo 401k. For health insurance. Again, as long as there's no other opportunity, you can secure health insurance and run it through your business. It does have to be in your name. It can't like be in your spouse's name and then be claimed on your business, because it does has to be added into your wages as a benefit as an S corp owner. If my health insurance does not cover dental, can I deduct any dental expenses? I know that with an S corp you can. Um, as far as with an LLC, I'm honestly not sure if dental is one of the medical expenses that would be approved. But we can look into that and get back to you, or you can schedule a call with one of our business advisors and they can talk to you more. But definitely with an S corp, you can deduct dental insurance. What are some common categories that we should be coding things for our accounting, i.e., meals, travel, research, advertising? So, yeah, those are very common categories. So, again, meals are going to be something that is only deductible at 50% if it is you taking like a client out for a meal. If the meal serves a true business purpose, if it's just you going like down to the bodega to grab lunch, that's not going to be deductible. Travel, again, it's like things like your airfare, your lodging, your meals when you are traveling away from home are 50% deductible. So meals would still go under meals. Your airfare, things like that would go under travel. If you take like a Lyft or an Uber, that would also go under travel expenses. Research, if you do have research and development expenses, those are a little bit more nuanced. So you'd really want to talk to a tax professional about your specific needs for that. And then advertising, pretty simple, usually marketing expenses. All right, Celeste, how do we calculate the percentage of rent to write off? That is a great question. So, what you have to do is you have to measure your space of your home that is used 100% for business. So, again, it has to be like an area that is used exclusively for business. So, even if, like, say you work from your kitchen, you work at your kitchen table, that is your space. You would only be able to measure the space that you work. If you have an office at your home, you measure the square footage of your office, and then you take that versus the total square footage of your home, and that is where you find the percentage that you can write off. So, if your home office is 200 square feet and your home is 2,000 square feet, you get a 10% business use of home deduction. Okay, if you use your bedroom desk as your office space, can that be claimed as a tax write-off, or does it need to be a fully separate space? To deduct the entire room, like your entire bedroom, it would need to be used exclusively for business. If you're just using a desk in your bedroom, you would have to just literally measure the space that you're using, the desk. Larry, are you familiar with Rob Structure's business owned in a C Corp via a retirement plan, not self-directed IRA? Where are you located? So I myself am located in Florida, in Vero Beach, Florida. Collective is located in California. They're in San Francisco. I am not familiar with the Rob structures. We just work exclusively with S Corps here at Collective, so I'm familiar with S Corps and LLCs and sole proprietors, but C Corps, not so much. I apologize. Where can we find the IRS defined expense categories that will be helpful for tracking them? So you can probably just kind of Google, your accounting software should have the chart of accounts laid out in there. They can kind of differ a little bit. There's not like a set standard. Every software can have a different chart of accounts. Some of them have customizable chart of accounts. But yeah, if you just spend some time searching, doing some research, maybe, download a free accounting software if you're wanting to kind of handle things like go the spreadsheet route, which is totally fine. You could download like a free accounting software or maybe a trial and kind of see like what their chart of accounts are if you want to model your spreadsheet after that and then track that way. But otherwise, your accounting software should have those already preset expense categories in there, and you can just apply them to your transactions. If you use a room in your home for an office, can you deduct the real estate tax? So, yes, you do get a portion of your property taxes that you can deduct. How many years can I postpone taking a W-2 from my 1120S LLC? So, Alexander, sounds like you already have an S corp set up. That's awesome. We don't recommend postponing that at all because it is kind of like a hard and fast requirement of having an S corp is the owner being on a W-2. So I would recommend, like, if you do have an S corp, that you try to get on payroll ASAP. If it's your first year and it's like a partial year S corp, like say last year you set up your S corp in like December, really towards the end of the year, it would be normal that you maybe wouldn't have had time to get yourself on payroll. But yeah, just the sooner the better, because if the IRS does audit you and see that you are operating your S corp, but you don't have that W-2 salary, there can be some consequences where they can like reclassify all of your distributions as wages. You'll have to pay all of the self-employment tax or the payroll taxes on those. And it could actually like default your S corp, blow your S corp status, and you wouldn't be able to re-select for a 5-year period. So yeah, just the sooner the better. It is a major part of being in compliance with your S corp. If you want to set up a call with one of our business advisors, they can definitely talk to you about that more. We do offer like a complete service package that does include payroll. Can I claim mileage on a vehicle that is not under my name? That's a really good question, Martha. Um, I am honestly not sure. Give me a minute to think about that, and I will come back to that one. Okay. I'm a one-person S corp and pay myself quarterly when I take a payroll. Is there a software that will allow this? Most of the ones I see are only monthly payroll. Yes, I totally get that. You can totally pay yourself quarterly. There's nothing wrong with that. Gusto, I know for sure you can customize how often you want to pay yourself, even if it does require you to set yourself up on monthly. You can like skip those payrolls and then run, say, like an off-cycle payroll once every quarter. We do have a dedicated payroll team here at Collective. We have Gusto embedded payroll as well. And we have members that, pay themselves all kinds of different frequencies. Some do quarterly, some do once a year. So Gusto, I would check into for sure. Uh, if I have a W-2 job, but I also have a 1099 that is the same occupation, can I still deduct expenses? So, Josh, that's a great question. So, you have a W-2 and then you have a 1099 on the side. You, of course, can deduct any expenses in relation to that 1099. You wouldn't be able to deduct any expenses for your W-2 job. But yes, anything related to your 1099, you can deduct expenses. If I contribute to a 401k at work, are the limits separate for a SEP IRA? That's another great question. You're just going to have to be mindful of the overall contribution limit, which is $70,000. You can contribute to different plans. That's no problem, but the overall limit is the thing you need to just make sure you're not going over. What benefit do I have as a one-person S corp versus a sole prop? So, as a one-person S corp, you get certain benefits. So, one of them would be an accountable plan, which is like an employee reimbursement plan. It allows you to claim these business deductions that we were kind of talking about a little bit, like your home office, for instance. You get to claim reimbursable expenses for that also become business expenses. So, it's a little bit more of a benefit there. Also, just the tax savings in self-employment tax. As a sole proprietor, you pay self-employment tax at a flat rate of 15.3% on your entire net profit. Whereas with an S Corp, you're just paying that 15.3% in payroll tax on your reasonable salary, which is just a portion of your net profit. So instead of paying that 15.3% on 100% of your business profit, you're paying it on more like 40 to 50% of your business profit instead. Can you estimate a reasonable percentage of overall expenses? For example, I know the entire amount I spend on restaurants or coffee shops, but don't want to backtrack every single date. Can I just estimate that 20 or 25% of the time was for business reasons? It's impossible to keep track of every event, happens too frequently. I totally get that, that, everything happens so fast and it's hard to keep up with everything. That's where having a dedicated business bank account and either like a bookkeeping software or a spreadsheet you track everything on comes in really handy. You can't estimate. Unfortunately, you have to categorize your expenses and report that exact amount. The IRS is just, they're nitpicky like that. What is the usual minimum that needs to be filed as a salary for owners in S Corp? Thanks, Monty. And what happens if the owners take no salary for a period of time or even an entire year? So, as far as the usual minimum, it's just really going to depend. I know that's like kind of an annoying answer, but it really just depends on a number of factors: how much money you're making, what field you're in, like what type of work you're doing, where you live. So there's really no set minimum. I would say usually between like 35 and 50% is a good number to have in mind. If you take no salary for a period of time, that's okay as long as you catch up by the end of the year. The IRS is really just looking for you to hit a yearly target. If you take no salary for an entire year, again, you're putting yourself at risk for consequences. Those consequences being wage reclassification, having to pay back all the self-employment taxes because they'll reclassify your distributions as wages. You'll have to pay all the payroll taxes on those at 15.3% and typically blow your S Corp status for 5 years. So definitely do not recommend skipping out on payroll for an entire year. It's a very important part of S Corp compliance. If I have a S Corp along with my W-2 and I've been showing a loss for the past 5 years due to business expenses, how long can we continue to claim losses on our S Corp? So that's a great question. That's something that I would recommend sitting down and talking to a tax professional that can really take a look at your tax returns. I have seen where, the IRS will, after a certain period of time, they can say like, hey, this is at this point you're not making any money. This is really like more of a hobby. So I would say, yeah, sit down with somebody who can really go through your returns with you, and give you a path forward, make a recommendation there. You mentioned the business owning the vehicle being separate from mileage tracking. Can you elaborate on that a little bit more? Yeah, absolutely. So, if the business owns a vehicle, you're claiming what's called actual expenses. The IRS has two methods. One of them is actual expenses and one of them is mileage. So you can kind of do either or. It's just their rules. With your actual expenses, um, it doesn't include the mileage. The mileage does factor in, like I said, it's the IRS's standard mileage rate. It's 70 cents per mile this year. They factor in things like maintenance, mileage, gas, all of that in that method. So it's really not a bad deduction at all. You can really get awesome deductions just for claiming mileage, but the IRS just quite simply doesn't let you claim both. It's just one or the other, unfortunately. R&D credit, rent your entire home to yourself below some threshold. Yes. So R&D credits are, again, they're a little bit nuanced. We always recommend speaking with a tax professional about them because there are certain pieces of documentation that you want to ensure that you are properly keeping records of. And then, yes, the Augusta rule, that is something you can do. We don't recommend it. Um, we get that question a lot. Yeah, we don't recommend the Augusta rule, but some CPAs that are a bit more aggressive may recommend it. I have a partnership S corp. My business partner and I live in different states. Can I deduct my home office expenses? If so, what's the best way for me to do that? Yes, you can still deduct home office expenses. You would want to do that through your accountable plan. So if you're an S corp owner, you get that benefit that I was mentioning previously, the accountable plan, and that would be the best way for you to deduct your home office expenses. If I have two LLCs, one tech consulting and one travel company, can my tech company hire my travel company to book my travel? Um, yes, I mean, I would not recommend it. If they do audit you and look into that transaction, it could be problematic because it would not be considered an arm's length transaction. So again, it could cause problems down the line. Um, I would not do that personally, but yeah. Josh, why don't you recommend the Augusta rule? So it's just really complicated and it's highly audited. It's just typically not worth it. It kind of opens up a can of worms with the IRS that is usually just it's not worth it. So we don't typically recommend it. Will the recording be shared? Yes, it will be shared within 24 hours. When you pay your payroll form 941, can you mail the IRS a payment or do you have to use EFTPS within so many days of payroll? Are you manually running payroll? You're not using like a payroll software. Um, I would highly recommend not running manual payroll and using a payroll software like Gusto, for instance. Gusto files all of the payroll reports for you on a quarterly basis, and they remit the payment for you to the EFTPS account. Um, I honestly, I'm not sure if you can mail in a payment. I've never seen that. I've only seen EFTPS payments for the 941. But yeah, I would definitely recommend a payroll software that'll just do that for you because that's a really easy way um, to get into trouble with your business is those 941s. The IRS does not mess around with those. Pay your kids below the minimum for business related tasks recommended if your kids are above legal age to work. Yes, if your kids are like 3 years old and they really can't contribute much to your business, no, not recommended. If your kids are 15 and they can, answer the phone or help you if you're, hauling gear to a shoot and they can help you with certain things, absolutely, that's totally fine. But the key there is that your children are of legal age to work. Otherwise, it's really hard to substantiate. And the IRS may just be like, no. Um, that's the thing with taxes is it's hard to sometimes, be the bearer of bad news, but it's better, I feel like, to hear it from me than to be face to face with an IRS auditor and have them be coming down on you. So, yeah, you can do that. You just want to make sure they're of legal age to work. Um, as far as the vehicle expense, I just financed a loan through the business. Do I deduct the purchase price of the vehicle or the monthly payments, auto insurance, gas, maintenance? Yes. So you would do the monthly payments, auto insurance, yes, gas, yes, maintenance, yes. Um, you want to make sure that insurance is also in the name of the business. So you don't want the insurance to be in your name. Everything needs to be in the business's name. What is the minimum to elect an S Corp? So the minimum recommended threshold here is $60,000 per year. So if you're making $60,000 per year or more, then an S Corp may be a really good fit for your business. All right. I think we got through everything. Thank you guys so much for joining. Really appreciate all the questions and the engagement. Really great. Let me share this QR code just one more time in case you guys want to book a call with one of our advisors to see if an S Corp is a good decision for you. Um, and yeah, we hope to see you again soon. Thank you so much. And I hope everybody has a wonderful rest of their day. Take care.